when you look at public markets versus private markets, to your point, when you look at companies north of 250 million in revenue, 86% of those companies are actually private.
Welcome. I'm Maneet Ahuja, editor-at-large at Forbes and founder of Iconoclast. And we're here at the Nasdaq MarketSite, and I'm thrilled to be joined now by Patel, CEO of Blackstone Private Equity Strategies. Viral, thank you so much for joining us.
Thank you so much for having me.
So Viral, Blackstone is the world's largest alternative asset manager with more than $1 trillion in assets under management. You joined the firm 20 years ago in 2005. Can you walk us through some of the most pivotal moments during your career trajectory at Blackstone?
Yeah, absolutely. So I've had multiple roles actually at the firm over time. I started in our advisory business when we were launching our Tactical Opportunities Fund. I joined David Blitzer to get that going. I spent time with our growth equity business to help launch that. I spent time in our credit business, and now most recently the firm's asked me to come back to lead up our private equity strategies for individual investors. And I'd say each one of those moments that I went through was pivotal in its own way, but I think maybe the narrative arc that fits across all of them was like this openness and willingness to say yes, right, to try something new. From credit to opportunistic to private equity, advisory, restructuring. It's just a lot of different asset classes. And I think having that openness to go do that has been really helpful for my career, particularly at a place like Blackstone, which is incredibly entrepreneurial, right? We tend to reward and expect people to have that sort of an approach. So I think that really that willingness to say yes was kind of the key decision for me that kind of drove my career at the firm.
And it's so interesting because you've worked across so many different asset classes, right? And yet this is where all the action is right now, where the market is moving. I recently was at the Case Summit, which really heavily focuses on the wealth management space. Obviously, as you know, we had met there last year as well. And I was surprised to learn that, while the public markets are shrinking, the private markets is where the opportunity is growing. So in order to serve investors, really the opportunity is right here. Can you talk to us a little bit about that?
Yeah, absolutely. I mean, I think if you look at the private equity industry, really over the last 20, 30 years, you've seen a tremendous amount of growth amongst the institutional market, right? So if you look at our limited partner base, what you'll find is that our institutional investors, pension plans, sovereign wealth funds, they can push 20, 30% into private markets. Families, endowments will push sometimes even north of that, 50 to 60%. But the average individual investor is actually still less than 3%, right? And so you've got this difference in terms of how much capital has been allocated by different investor groups. And I think if you look and ask our institutional investors, why are they so interested in private markets? The thing that you're here, and you've obviously heard this at the Case conference as well, is this idea that private markets offer really two things. One, they provide complementary exposure and diversification. And then two, they provide enhanced returns. So a lot of people are surprised to hear that when you look at public markets versus private markets, to your point. When you look at companies north of 250 million in revenue, 86% of those companies are actually private.
Are now private, and it used to be the reverse, right?
Absolutely. If you go back, decades, when I started as an analyst in investment banking, one of the interesting things was when I would go on a road show with the CEO, what you would hear from them is they really wanted to just go public, right? That was kind of the I made it type moment. And part of the reason for that was back then, the public markets were the only market big enough to actually fund the growth for a number of these companies. But today, when we're meeting CEOs, it's not really about the source of capital. It's not about public versus private. It's really about wanting to build a great business. That's what's on CEOs' minds today. And sometimes the private markets are wonderful for that. Sometimes the public markets can be. But that change in mindset, I think, is a real big shift that's happened in the past 20, 25 years.
What are some of the other shifts that have happened since, again, we mentioned that you've been within this private equity firm, but now democratizing alternatives is like the in vogue trend, right? So now as the entire industry is moving in this direction, you're coming at it from such a unique perspective because you've been in the private markets for the majority of your career.
So a few things. We've been focused on this wealth management segment for a long time now. So we actually launched our private wealth business back in 2011. Steve Schwartzman had the foresight of seeing this change coming. And it's interesting, when we launched it, it was one distribution partner for $10 billion in one channel. That was our entire private wealth business. You look at that today, it's $290 billion of capital in the private wealth channel. 300 investment professionals, and importantly, it's not just a sales function. Like this, we built this out to really be an end-to-end offering to help our distribution partners, our financial advisors, our clients understand the asset class. Because I think one of the things that people forget is how early we really are in this. I mentioned that less than 3% in alternatives for individual investors. It requires a tremendous amount of education in order for the market to really understand private markets. And we've been at the forefront of that for the past 14 years, really driving a lot of it. So
what do you mean by that with education? Like, what are some of the efforts that Blackstone has undertaken? Is it with your existing investors and prospective investors, or white papers? Walk us through some of that, like, educational process.
So, one of the big things we started doing many years ago is we introduced something called Blackstone University. And that's an initiative that we have that allows the financial advisor community and the wealth management community, and in many cases, actually, a number of end clients, to come to Blackstone and understand all of our products and hear from our business leaders to understand what are we doing in private markets, how are we approaching that, how is Blackstone approaching it perhaps differently than others. But there's a big focus on explaining to individual investors and the wealth management community why having private equity or private markets in general is, as part of an investor portfolio, is so important. And so that's the type of thing that we tend to do with folks.
So looking now over the next 5 to 10 years, how do you see the market for individual access to private equity evolving?
So we think we're we're at the early innings of a really big secular shift, a mega trend that's going to be happen as these investors move from 3% allocations to something a lot higher. And one of the big changes that's doing that is the advent of these perpetual capital vehicles that are now coming onto the market.
Or like permanent capital,
and
right?
Permanent capital, exactly, right? So the historical approach for private markets was really in these drawdown structures, which were created for the benefit of institutional investors. However, they have a lot of friction associated with them. There's very little liquidity that comes in these drawdown structures. Perfectly suited for institutions, but a little harder for individual investors. And we started opening up this asset class with these perpetual structures that provide periodic liquidity and monthly subscriptions with the real estate asset class. We then did that with the credit asset class. We've done it in private equity, we've done it in infrastructure, and we think there's a number of these products that will come to market that'll allow individual investors much easier access into these portfolios. And so we do think that that's going to be a really, really big shift over the next 5 to 10 years as you see this portion of the market get the benefit of increased diversification and enhanced returns.
And so you mentioned liquidity, and also I'm curious about flexibility. So liquidity and flexibility are key for individual investors. So like, how does that factor in? Is the tide turning? Are things getting a little bit more just like easier for an individual investor to dabble in this market and be able to jump out if they feel they need to make that decision? Or
yeah, I think that the structures provide a tremendous amount of flexibility. I think we are very focused on thinking about these products as long-term in nature, and the ability to create liquidity is really much more of a feature that allows investors to rebalance portfolios. So if you think about historically the way portfolios have been designed, wealth management used to talk about things in terms of an equity allocation, a fixed income allocation, and an alts allocation. And the alts allocation was put differently because, to your point, the liquidity profile in alts was very different. I think with the advent of these products, individual investors now get to think about them a little differently. And the big changing that we're seeing in the market is that financial advisors will actually talk to their clients about saying, well, how much equity do you think you should have? How much fixed income should you have? And then how much do you want public? How much do you want private? Right? That's a fundamentally different way to engage with clients, and it opens up the market for individual investors to express investment ideas in a variety of different more strategies than they had historically.
Yeah, one of the interesting things that I was hearing from some other industry professionals also was that people have more flexibility to invest in areas that they're personally passionate about through the private markets, whether that's women in sports or sustainable investing. I mean, it's a much broader way to think about alternatives as an entire investment class, right?
Absolutely. I mean, the private markets are just immense in size, right? I mean, going back to what I was saying earlier, 86% of companies greater than 250 million in revenue are private. So much of what drives the global economy is happening in private markets. And as more and more managers bring tailored products to the individual investor, to your point, it does allow them to have exposure to areas that they might otherwise not be able to get exposure to.
And so what are some of the ripple effects of all of this on the overall wealth management industry that you're predicting?
Well, I think increasingly we will see that 3% that I was talking about allocation go up meaningfully, right? So I think you will find that individual investors are likely to start viewing these categories as much more accessible and will start allocating more capital towards it. We do think there's likely to be an approach where a lot of individual investors will take almost a core satellite type approach to investing, where these perpetual products can provide a nice steady base of capital and exposure that allows them to stay invested in private markets and compound their return in private markets, and then complement that with satellite offerings where if they want that sports exposure, they can go get it, or if they want sustainability, they can go get it. But these perpetual capital vehicles, if built correctly, can provide a lot of breadth, a lot of diversification, and importantly, attractive returns.
That's great. It sounds like there's a lot of customization opportunities where appropriate.
Absolutely.
All right, awesome. So drilling down a little bit more specifically into some of Blackstone's investments, Blackstone has invested in the consumer space in brands like Jersey Mike's and Seven Brew Show, which show strong conviction in the consumer franchise space. What makes these businesses attractive in the current market when there's so much geopolitical uncertainty, tariffs, et cetera, that are impacting import-export prices?
Yeah, well, it's less about what makes them attractive, I think, today. What we're really fundamentally attracted to is the underlying business model, right? So franchisor business models are attractive for a few reasons. If you find the right concept that has a lot of white space for growth, they can be tremendously fast growing. Because a franchisee is actually responsible for opening new stores, funding the capex associated with them, and hiring the people, these tend to be very high margin, very low capex, and very high free cash flow. So those are all, all
those
wonderful
are
words.
Ding, ding, ding,
Yeah,
good things to a
absolutely.
private equity firm operator, right?
Absolutely.
Yeah.
And so when we look at that, now you have to find the right concept, but when we look at that, that gets very exciting. Those are business models that we think can be sustainable, that can grow through cycles, frankly, because if you're opening enough store counts as a franchisor, your revenue model is based on royalty of overall revenue, right? And so we like that. We have a long history in doing this, right? Even if you go back to 2007, and our Hilton investment was a franchise investment. If you think about our recent investments like ServPro, we have a significant number of these, and we've actually done quite well with them. One of the things that we can do really well is help our management teams think about where to open new store counts. So we have a data science team at Blackstone, quite large, that we keep at the firm, and they work with our management team. So example of Jersey Mike's and Seven Brew Coffee, for both of them, we actually looked at the existing store counts for all of the chains that existed. We looked at the margins of the SKUs that we're selling. We looked at the demographics of the stores around those locations. And then we mapped that across the United States to figure out where should we be opening stores to drive value. And so when we can bring those sort of resources to bear to drive our investments, tied and combined with these really fantastic business models, that tends to be a win-win for us.
And you guys must be doing several things, right? But one especially because I think we recently featured the founder of Jersey Mike's on the cover of Forbes as well. So you guys are also a huge global player in the financial markets. Where are you seeing opportunity outside of the U.S. right now?
I would highlight two markets for you. One, India. So India has actually been our best performing market for private equity in the last decade. We think that you have a very pro-business government, They're investing heavily in infrastructure. And we think focusing on investment opportunities that are service-oriented towards the domestic economy, really servicing that rising middle class, is a very attractive place to play, and we think it's going to continue to drive investment opportunities going forward.
Across which industries specifically, like infrastructure and?
Well, you know, certainly some on the infrastructure side, some on the real estate side, but also just on the services side, right? When you have a middle class that's generating as much wealth as the Indian economy is starting to generate for its middle class, any services that are really focused on trying to, cater to that group are areas that we're really spending time on. So financial services is a big area that we've spent meaningful time on. Real estate, as you mentioned earlier, as well.
Micro lending, right? Or
micro lending can be in the context of larger, in terms of context of larger financial institutions. A piece of that could potentially be micro lending as well. Yeah.
Any other regions or markets that are particularly attractive right now?
Yeah, the second one I would highlight is actually Japan. And so, you know, that economy has moved from a saver economy to a growing economy. Investing rates are growing. You now at least have inflation back into it. But interestingly, there's just a lot of trapped value in Japan. There hasn't been a lot of foreign direct investment into the country. And so as we're getting in there, what we're finding is assets that can be repurposed, reimagined, reinvigorated for growth, and there's a tremendous amount of value add that we can add in that market. And so Japan and India would be the two international markets I would highlight as being attractive for us right now.
Interesting. And so as somebody who has helped build Blackstone's businesses from the inside out, what would you say it takes to be entrepreneurial within a large institutional organization?
It's a great question. I think it actually starts with the tone from the top. Steve Schwartzman and John Gray have really instilled a entrepreneurial spirit at the firm. I mean, Steve started Blackstone with $400,000 with Pete Peterson back in 1985. We have our 40-year anniversary this year. But Steve's a founder, and Steve's an entrepreneur, and he really pushes that approach internally. So the first thing I would say is we've created an environment where being an entrepreneur is welcomed, where being focused on how do we drive growth, not thinking about what did we do in the last 5 years, but what can we do in the next 5. That's just the way the entire ethos of the place works, right? And so when you have an organization as large as we are, but you have a group of leaders within it, kind of top to bottom, that are all really driving for growth and thinking about what more can we be doing, it creates a really attractive environment for it. And then the other thing is you have to hire people that think that way, right? You have to really focus on individuals that want to grow in that way, that want to be entrepreneurial, that are going to thrive in those markets. But if you hire the right people and you set the right tone and culture, that really drives a lot of it.
And what are some of, the Iconoclast audience is all about titans of industry, disruptors, people who are aspirational and want to be at the top of their field like yourself and working at organizations like Blackstone or founding the next Blackstone. So tell us more on the leadership front. What are some of the other biggest leadership lessons that you've learned throughout your career, or also maybe that you've observed from Steve, John, and other leaders at the firm?
So what I would say to that is, and it gets back to your scale point, in order to scale a business to the size that we've gotten and to continue scaling it from this point forward, I think the biggest leadership lesson I've learned from watching Steve and John would be just the focus on culture. It is a top-of-mind management committee focus for us. It's something that we spend a lot of time making sure we cultivate, and we make sure that each person lives it and breathes it. So as an example, to the Iconoclast watchers and listeners right now, like the Blackstone website has a tremendous amount of information on our culture. And one of the things that's on there, I think it might be one of the first or second things on there, is this idea of relentless pursuit of excellence, right? And we built a business where we expect everyone to have this kind of relentless pursuit of excellence. If we're going to launch a new business, if we're going to work on a new initiative, the expectation internally is that we're going to do it to the highest degree with the highest integrity, and we're going to try to be the best in the market. And that is not something that happens overnight. It's a culture that's built over decades, and it's also a culture that needs to be continuously invested in, right? It's something that our business leaders and our management at the firm is spending a lot of time really driving. And so I'd say the big lesson I've got is that if you want to scale businesses at any level, small businesses, large businesses, hyper-growth businesses, getting the culture right is absolutely critical.
All right, so final question. What most excites you about this evolution across the democratization of alts and the wealth space over the next 5 to 10 years?
It's how early we are, right? I mean, we are in the early innings of investors on the individual side starting to allocate their capital towards private markets. And I think the amount of innovation that is going to happen in the industry over the next 3, 5, 10 years to really build products that are best suited for that individual investor is incredibly, incredibly exciting. And with our private wealth team, for me to get the opportunity to be in an organization that's going to be at the forefront of driving a lot of that change is really exciting. I think we're going to be very pleasantly surprised over the next 10 years as an industry about how much innovation can come out of this. It's early, so it's exciting.
Well, that's definitely a bright spot in the markets today. So Viral Patel, CEO of Blackstone Private Equity Strategies, thank you so much for joining us.
Thank you for having me.